Hey everyone! Today we're looking at a really interesting shift happening at the intersection of crypto and AI. Bitcoin is down about 27% this year and currently trading around $63,000. Meanwhile, the big mining companies aren't complaining, they're pivoting. Specifically, they're moving from Bitcoin mining into AI data centers. We're talking about more than $70 billion. And according to some estimates, over $85 billion in AI and high-performance computing contracts. Let's break down exactly what's going on. After the 2024 halving, mining profitability collapsed. Hash price is near multi-year lows. At the same time, AI models need massive amounts of power and data center capacity. And the miners already have the most valuable assets: grid connections, land, and large-scale electricity. They're now swapping that for long-term, stable lease agreements. According to CoinShares, by the end of 2026, listed miners could generate as much as 70% of their revenue from AI, up from around 30% today. Let's start with Hut 8. They fully commercialized their 1 gigawatt Beacon Point campus in Texas, with two 15-year leases of $9.8 billion each, totaling $19.6 billion. Across their AI portfolio, they now have 949 megawatts of contracted IT capacity, $26.6 billion in aggregate base term contract value, and expected average annual net operating income of more than $1.75 billion. The tenant is high investment grade, and the Financial Times reports that NVIDIA is the one behind the Beacon Point deals. At IREN, the standout is the $9.7 billion 5-year AI cloud contract with Microsoft for NVIDIA GB300 GPUs. In July, they added another $2.8 billion in new multi-year contracts, and their year-end 2026 AI cloud ARR target is now over $4 billion. With 85% already under contract, TeraWulf signed a 20-year lease with Anthropic, worth roughly $19 billion, for 401 megawatts of critical IT load at their Justified Data campus in Kentucky. This is one of the longest and most valuable deals in the sector, and Core Scientific has about 590 megawatts and more than $10 billion potential revenue with CoreWeave, plus a new AMD partnership for 530 megawatts and over $14 billion. In total, they now have roughly 1.1 gigawatts and more than $24 billion in base contracted revenue. Colocation is already the dominant part of their business. The stocks have responded too. Several names, Hut 8, TeraWulf, Core Scientific, have significantly outperformed Bitcoin year-to-date, in some cases by 50% to 150% or more. The market is clearly re-rating them. They're no longer seen purely as Bitcoin miners, but as AI infrastructure providers. These long-term contracts with investment-grade customers promise stable cash flow and much better margins than traditional mining. Of course, it's not all upside. Van Eck estimates there's still roughly a $50 billion near-term funding gap to actually deliver these plans. So far, only about 25% of the contracted capacity has been energized. Construction delays, GPU shortages, power permits, higher interest rates, all of these are real risks. Many companies also have high customer concentration. If AI demand slows or financing gets harder, the story could change quickly. To sum it up, a meaningful part of the Bitcoin mining industry is genuinely transforming into AI data center operators, backed by tens of billions of dollars in long-term contracts. This is one of the most compelling stories right now at the intersection of crypto and AI. What do you think? Is this the future, or is there too much risk? Drop your thoughts in the comments. If you enjoyed the video, hit like, subscribe, and I'll see you in the next one.